So another optional question, question 5. This one is to do with benefits in kind. So it's to do with employment income, and then a little bit of national insurance in it as well for part B and part C. So I'm not saying you'll always have a question on employment income, but remember we're trying to test everything. So if employment income was say in question 1, then this question might be say on property income instead. So we're not going to keep repeating the same topics. You know, once you've been in tested in one question, we're going to think of something different. So we're trying to give a good rounded exam. All right, let's see what they want us to do then. So part A is to do with benefits in kind. So this is a big part of the question. Work out the taxable value of all the benefits in kind that we've given to Sally. So if we have a little read through then, Sally gets a salary. She also gets a bonus. And then she's got a subscription to the gym. All right, anything like subscriptions, medical insurance, that type of thing, it's always the cost of the employer. So that's her benefit. Now, she gets a mobile phone, but we should all know that mobile phones are an example of an exempt benefit. So like the employer contributing to a pension scheme, that's another type of exempt benefit. So learn those exempt items because you'll probably get one in there. And then she's got the car. So the car's going to be the hardest one because she gets private use and we've got to work out the benefit for that. All right, now let's add it together and then we'll bring the car in. So first of all, we've got the gym. $360. Remember to say the phone is exempt. So nothing on the phone. And then we've got the big one, which is the car, isn't it? So the car is a benefit if there's any private use, which there's going to be if they give it to you. So we always start with the list price of the car. So list price, $22,400. So it's not the cost to the employer, it's the list price when it was originally made. Now, you're allowed to reduce the list price if the employee makes a capital contribution. And that happens here with Sally. It tells you she made a capital contribution of $4,000. Now it is up to a maximum. So if they contribute more than that, then you only get a reduction of a maximum of $5,000. So that reduces it to $18,400. Now we need to multiply that by a percentage for the emissions. So we need to look what our emissions are, and our emissions are 133. Now we always round them down to the next block of 5. So I'm going to round it down to 130 because we can't have decimal places. And for the first 95 emissions, she's going to get 23%. That's just the basic off your rates table. And then the rest of it, so she's got 130 minus 95. So that excess is then going to be divided by 5 because you get charged 1% for every 5 emissions that go above the minimum limit. So she's got 35 emissions above the limit, divide that by 5, and that gives her 7%. Now the final thing you want to look for until you add it up is what sort of fuel, and it says Sally's employer pays for a private petrol. All right, so I'm just going to write here that it's not a diesel car. Because remember with your diesel, you've got that extra that you need to add on. So we're not worried about that. So the rate for us is 30%. Then we need to check, has she had the car all year? And it says here, yeah, she's been a manager throughout the year. And there's no suggestion that the car was given partway through the year. So we don't need to prorate or anything. So we can just literally take the full percentage against the adjusted list price. So that gives her a car benefit of 5,520. Now, because she's got a car, we need to think about fuel. If she gets a car for private use, the company may or may not give her fuel. And it does say here, the employer pays for all of the fuel. So she is going to get a fuel benefit as well. Now, the fuel benefit, we are just going to pick up the figure on your rates table. So this is your base figure. You'll see this on your rates table. It's nothing to do with a calculation. Every car that gets fuel will use this base figure. And then we multiply it by the same percentage as you had for your car. So as long as you use the same percentage, if you got this wrong, but you use the same wrong percentage, you'll still get your marks. And she also had it for the whole of the year again, giving her a fuel benefit of 7,230. So if she got the fuel for part of a year, remember to prorata it. Remember, there are no deductions for any contributions to fuel. You either get it completely free or you pay for it all yourself. All right, so it's an all or nothing benefit. So to finish it off, in total, her benefits came to 13,110, and that will be added to her salary in order to work out her income tax computation. Now, Part B is asking you about the Class 1A. Class 1A is something that the employer pays on the benefits. So basically, whatever benefits you've got in Part A, Part B will have Class 1A. So you simply take whatever your answer is, 13,110, and then you look on your rates table, the Class 1A rate is 13.8%, and then just take it to the nearest figure. So that's purely being able to read off the table and apply it to your figure, whether your figure was right or wrong. Final Part C, calculate the national insurance for Sally. Now, Sally is an employee, so we're doing employees Class 1. Right, we're not bothered about the employer, it doesn't ask you about the employer, it just says Sally's national insurance. So Class 1 is based on cash amounts. So you don't pay Class 1 national insurance on your benefits, so you don't need to incorporate this. We just want to know what cash amounts did Sally get. And if you look at the question, these are her cash amounts. She got a salary and she got a bonus. All right, the bonus is based on the year that it's paid in. So March 19 falls in tax year 18-19. So it's always based on the receipts. So that needs to be included. So she's got a salary of 40, plus she's got a bonus of 4. So it's important you don't add your benefits in. All right, benefits are Class 1A and cash amounts are Class 1. Now we need to look at our table. So for national insurance, the first 8,630 has got no tax, has it? That bit is exempt. So the rest of the 44,000, which comes out at 35,368, will be based at 12%, right? And that gives me 4,244 as my total. Obviously, if you're asked about the employer, then you'd be using that 13.8% together, but it doesn't ask you for that, it just asks you about the employee. Okay, so that is a little question, a little bit of employment income, a little bit of national insurance. You can see how the topics link together there quite nicely.